Here is why the US government should use principal-protected Bitcoin bonds to partially fund soaring deficits. With its hard-coded supply limits, disinflationary characteristics enforced by the periodic halving events, and growing financialization via futures and spot ETFs, Bitcoin is on the cusp of underpinning a new global hurdle rate, which is generally defined as the minimum rate of return required by investors. Concurrently, the U.S. Treasury will need to issue a growing quantum of T-bills and bonds in the upcoming years to finance the burgeoning deficit of the world's largest economy. Now, one Bitcoin maximalist has posited that the U.S. can leverage Bitcoin's unique characteristics to partially fund those deficits. Here's the would-be results. $1 billion raised, $800 million put in 5 years, issuer note at 4.564% APY, $200 million put in spot $BTC upon maturity. And GT, $800 million note matures at $1 billion, issuer note provides. Like an $800 million 5-year note carrying an APY of 4.5%, and the residual 20% or $200 million is invested in Bitcoin. The $800 million 5-year note will mature at a value of $1 billion, offering principal protection to investors. On the other hand, the $200 million Bitcoin tranche offers a variable yield. Watcher.guru, at WatcherGuru, July 16, 2024. Let's say the U.S. Treasury did issue such a bond 5 years ago when Bitcoin was trading at around $10,000. Relative to the current price of around $60,000, this corresponds to a price appreciation of around 500%. Consequently, BTC worth $200 million 5 years ago would be worth around $1 billion at today's price. Cumulatively, the lenders will get paid $2 billion for the $1 billion that they lent 5 years ago, as per this theoretical scenario. What's more, with Bitcoin predicted to reach a price that is in excess of $1 million over the next decade, the US government can exploit this explosive growth to finance its soaring deficits at very attractive terms. With Mt. Gox distributions also on the horizon, we examine these major sell-side forces, as well as the role ETFs have on price action. Discover more in the latest week on chain. pic.twitter.com/rhk8pj7tpt, Glassnode, at Glassnode, July 16, 2024. As we noted in another post, the German government has now completed its sale of around 50,000 BTCs during a raid on the pirated content website Movie 2K. Moreover, the market remains on edge as Mt. Gox creditors continue to get paid ahead of the October 2024 deadline. For the benefit of those who might not be aware, the Mt. Gox exchange had declared bankruptcy in 2014 after a devastating hack that resulted in a loss of around 850,000 BTC. In February 2023, as part of the much-delayed settlement, some of the defunct exchange's largest creditors agreed to Bitcoin and Bitcoin Cash-denominated transfers before the 31st of October, 2024. Eric Bakunas, at Eric Bakunas, July 16, 2024. On the bright side, net inflows into the spot Bitcoin ETFs remain robust, having already crossed the $16 billion mark in just 6 months. Andre Dragas, Bitcoin and Macro? At Andre_Dragas, July 16, 2024. Finally, analysts are already positioning for a broad-based global liquidity bonanza, which should act as a potent tailwind for the world's largest cryptocurrency.